This is Michael Fox, and this is the Prospector News Podcast. And joining me today, I'm privileged to have Dr. Marc Faber, the editor and publisher of Gloom, Boom, and Doom report. Welcome aboard again, Marc.
Well, thank you very much for having me on your program. And I wish you and your viewers or listeners a happy and prosperous new year.
Yes, and I wish the same for you and your family.
Thank you.
So, as I said, when the clock struck midnight on New Year's Day, good riddance 2022. There was nothing but gloom and doom last year, and I didn't see a whole lot of boom. Am I right?
Well, to some extent, yes, there was a lot of gloom, but equally we have to see that the markets are no longer in concert with each other. In other words, some markets move up and some markets move down. I mean, the precious metals market was okay last year. It was essentially flat, so you didn't lose any money. And in a year when the Nasdaq is down 33% and the S&P is down 20%, to be flat in an asset class is not so bad.
And if you were in silver, you actually made a little bit of money.
Yes, absolutely. And depending on when you went into gold and silver, in the last 3 months of the year, we had a strong rebound in some asset prices. So let's say, if I look at my portfolio, and I run several portfolios, they were very bad at the end of October. And then November, December, they recovered quite strongly, and some were actually positive for the year, and some were mildly negative for the year by about 3%, 4%. But in a year when everything else was down like 20, 30%, I thought that 4% decline is okay. And then what also happened at the end of 2021, I mean, going into 2022, everybody in the world said, well, there will be a move of manufacturing out of China into other countries like Pakistan, Bangladesh, and especially Vietnam. So Vietnam was one of the favorite markets. And Vietnam continued to grow strongly in 2022, but the stock market was down 40%. Equally, at the end of 2021, I wrote on 2 occasions about the Turkish stock market. I said, nothing looks good in Turkey, but stocks are low because there was high inflation, around 80%. And the currency had collapsed, so stocks had also collapsed. But on my valuation models, Turkey came out as an attractive alternative for investments. And then I got some emails by readers and so forth, and they told me, oh, you don't know Turkey, and everything is bad, and Erdogan is worst kind of statesman and monetary, has no clue about the economy. I said, this is all true, but the Federal Reserve in the US has no clue about the economy either. So what's the difference? In any event, the Turkish stock market, measured in US dollars, because they have a Turkish fund which we can follow, was up 100% last year in 2022. So I'm just saying that when everybody's so gloomy, and there was very heavy buying of puts in October and November, and even in December as the market started to recover, the put buying exceeded call buying by a huge margin. Anyway, I turned at the time in October very positive about Hong Kong and China, because I arrived in Hong Kong in 1973. So in other words, essentially 50 years ago. And I've never seen the atmosphere in Hong Kong so negative. The sentiment among investors, both local and foreign, was so negative. And what has happened now in the last 2 months, the stock market is up more than 30%. And many stocks have doubled from the lows. So I'm just saying, I think we're in an environment where similar to 89. In 89, the Japanese stock market was 50% of the world's stock market capitalization. I repeat, in 89, Japanese stock market was 50% of the world's stock market capitalizations. Now the US is 50%. In 89, Japanese stocks started to go down, and they went down until 2003 and so forth. So major bear market. But what happened, the money flowed out of Japan into other countries. And so we had the big bull market in the NASDAQ, 1990 to 2000, and afterwards in financial stocks and housing stocks and so forth. So we could have the US underperforming going forward and other markets starting to move up. And I think emerging economy stocks, which have been down year in, year out since 2010, compared to the US, and in a bear market themselves since 2015, I think emerging markets look very attractive at the present time.
You mentioned the Japanese and what happened in 89. It's very similar to what's going on in the US right now. Do you think the US Fed has learned any lessons from the Japanese from that period, or are we destined to see the US making the same mistakes as Japan did?
Well, I hope they're not getting any lessons from Japan. Otherwise, we'll have another disaster.
Well, yeah, that's true. I kind of chuckled to myself when you said everyone gave you grief about Turkey. That's always a sign that I'm right. When everyone tells me I'm wrong, that's generally a good sign that I'm probably right about what I'm thinking.
Yes, absolutely. No, but I want to say it's, the S&P and the NASDAQ, they have a problem. Although they're down, and in the last 2 days, they've been rebounding. But the point is, they're not cheap. You look at the price to sales of the S&P, it's still as high as it was in year 2000. You look at the market capitalization of the US market relative to the economy, to GDP, we're still at a very high level. So I think the S&P may not perform very well, but I think some emerging economies could be very good performers in 2023.
You mentioned Turkey, you mentioned Vietnam. What other of the emerging economies do you see this money starting to flow into?
Well, I think that China, Hong Kong looks very attractive on price to book. I mean, in Hong Kong, okay, I agree that Hong Kong will never be the same and so forth. The US will never be the same as it was in the 1950s. You can forget about that. It's never going to be the great country that was America in the 50s and dominant around the world. Relative to the rest of the world, Western societies, the US and Europe, has been going down for years. India is now a larger economy than its previous master, the United Kingdom. In 2022, for the first time ever in modern history, we're not talking about 1,000 years ago, but in modern history, India overtook Britain as the world's 5th largest economy. And I just give you an example. You look at Qatar, the World Cup, the FIFA World Cup in soccer. Okay, I know that many Americans are not particularly interested in soccer, but they will be in future. That I guarantee you. Soccer is the game of the world. It's not baseball and it's not basketball and it's not American football, but soccer is the world's #1 sports event. Everybody criticized Qatar, but the finals were a fantastic event. And the whole world, and I'm saying this again, the whole world was happy to see Argentina win and NATO country France lose, because the world doesn't agree with the policies of NATO under the hegemony of the United States, period. And we live in a different world. When Mr. Biden says, oh, all the European countries are behind us, well, to some extent, but I can tell you the rest of the world is not behind the policies of NATO. The world is 90% of the world's population, by the way.
Yeah, no, that's absolutely right. We have a tendency to be very Western centric, especially here in North America. It's funny you mentioned the World Cup. I happened to be in London at the Minds and Money event when the World Cup was going on. And that was an eye opener for me, because you couldn't move anywhere, any place, without seeing soccer. And, here in Canada, where I am, yeah, we actually were in the World Cup for the first time in like 40 years. And we now officially have a World Cup goal. But it doesn't have the same resonance here in North America as it does in other parts of the world. And I knew it was big, but I didn't understand exactly how big it was. And I think you're right. I think we're going to see soccer become more and more of a predominant sport here in North America as things move forward. So it was definitely interesting. I found it really interesting, the support behind the Moroccan team, even having not ever had an African team get that far. And I always think here in the West, we spend too little time looking at Africa and looking at the opportunities to work in partnership with them. Is that one of the emerging markets that we should be paying attention to as we move forward, is some of these African nations?
I tell you, it's very funny. I went in 1994 to Morocco. I invited my brother and we went to Marrakesh and we had a great time, especially at night. and as a emerging market investor, I said to my brother, okay, tomorrow I will go and visit the stock market, because this was an emerging market nobody had essentially looked at for years. So I went to the stock exchange, and the chairman of the stock exchange was really a nice person, and he introduced me to a broker and so forth. And right away I said, okay, I open an account and I will invest some money, because I thought that nobody had ever shown any interest in stocks in Morocco. So I bought some Moroccan shares, the 5 blue chip companies in Morocco. And then I didn't do anything. And after 3 years, the market had more than doubled. And then I sold again. But this is it. In investing, you have to look at neglected areas of the market. These neglected areas can be in commodities, as they were 18 months ago, or they can be in currencies, or they can be in stocks, or they can be in real estate, but somewhere there is something neglected in the world. And sometimes you have to wait for a long time until the neglected sector comes and provides you with huge capital gains. But frequently the neglected sector in the area of stocks, in other words, in equities, will provide you with a dividend yield that is relatively high.
Yeah, cash flow is always good. Yeah,
Yes, I mean,
I
can
know
tell
what you're
you,
saying about neglected markets. I work a lot with the mining market. There's a market that's been in neglect for almost a decade.
yeah, sure, I agree with you.
But one day we're gonna have our day. I keep saying that. One day we're gonna have our day.
Well, today is not such a bad day.
No, today was not a bad day in the markets. As I took a quick look before we started our podcast today. The other question I had for you coming out of the African region is I read a report that the country of Ghana is now going to start to pay their debt and their oil in gold, which Ghana is a large gold producer
Yes,
because their currency has essentially collapsed along with a lot of
yes.
currencies against the US dollar. Not so much collapsed as the dollar is kind of outmuscled them forward. What do you think the significance of that going forward? And is there going to be a ripple effect of other countries looking to do something similar?
Well, Michael, I think this is a very important issue that you raised here. You notice the war in Ukraine has divided the world, and a large portion of the world, or the majority of the world, in terms of GDP and in terms of population, does not agree with the policies of the US. And they are moving away from the US dollar. Look, if you have a country that has large foreign exchange reserves, and we have now two examples. When the US left Afghanistan, they froze the assets of the Afghani government. Now, Afghanistan is a country where starvation exists. This is an ultra impoverished country. And to freeze the assets is a horrible measure. And the Russian have also large foreign assets. They were also frozen. And so every country that was non-aligned, like India and China and so forth, they asked themselves, oh, what the hell is happening here? Are our foreign exchange reserves safe? No, they are not. So they will gradually move out of US dollars and trade more and more outside the US dollar bloc and outside the SWIFT system. I'm very bearish about the US dollar. I think all your listeners should move money outside of the US dollar.
Yeah, I'm not particularly positive about the US dollar myself. I see similar things to what you're seeing. I see people moving away from it and other countries moving away from it. I don't think it's going to be an overnight thing like some people are suggesting, but it's going to be a slow, drawn out process as we move.
I agree.
As we move, and whenever the world currencies have changed, it's never been a pretty scenario. And as far as Afghanistan goes, the US freezing their assets like that should be considered a war crime, personally.
Yes, I agree.
And the sad thing is the Afghani people are sitting on a ton of resources, and they have the potential to be a wealthy nation if it wasn't for the Russians, the Americans, the British. I think the Chinese are about the only ones that haven't screwed them over. So
not yet.
Not yet, but there's still time, right?
No, but I just want to mention in this context, not long ago, maybe 6 months ago or a year ago, the Chinese completed a railroad through Cambodia into Thailand, okay?
Mm-hmm.
So now you can essentially board a train in Bangkok and travel to Beijing by train, to the capital of China. When the Chinese built the railroad through Cambodia, which connects the north with the south of Cambodia, through Laos, the foreign press, the media, accused China of all kinds of colonizing Laos and so forth. So some people then said, well, it's better to do it this way than to carpet bomb Laos the way the Americans did it during the Vietnam War. You understand? The
Oh, yeah.
media is very much against anything China does. Now, I'm not saying that China is an angel. This we all know, but equally we also know that the US is not an angel. So the way the Chinese go about, they go to Africa, yes, but they also build something in Africa, to be fair to them. They finance, I mean, I was on the board of directors of Ivanhoe. The large shareholder is a Chinese company, and they provided the financing and they provided the assistance to the infrastructure building and so forth. So they actually do something.
Yeah, no, they do. The reality, if we compare China and the United States, both countries are very similar. They're very self-serving. They're looking out to what they feel is their best interests, and they act accordingly. And in the more recent decades, increasingly the self-interests of China and the United States have been in conflict with one another. We get Western media, so of course it's going to be anti-Chinese because it's in their best interest to be that way.
It's extremely anti-Chinese. It's anti-Putin. It's anti-Iran. I mean, they always have some common enemy.
Well, it's the military-industrial complex. It has to have an enemy, or it doesn't exist.
Correct.
That's been the way since the 1960s. The question I have, because you're much closer to China than I am here in Canada, are the COVID lockdowns actually being reduced? Are people able to move about again? Is the economy starting to open up, or is it still kind of government stagnated like we were for a time?
Well, I'd say, I think Xi Jinping, the leader of China, has now, after the party congress, has a team of people who are relatively young and they're very progressive in terms of economic policies, and they understand that you need the market mechanism to make it work. And the politicians, under the pressure of the private sector, once wealthy people lose a lot of money, changes occur, because the wealthy people have influence. They have a lot of influence. And so I think that China has pretty much abandoned its COVID policies. But, there are setbacks. And there were also lots of cases of COVID occurring, but it seems the wave is now over. Secondly, I don't think for a minute that the lockdowns in China and the severe policies had anything to do with COVID. I think it was a test case. How far can you go in commanding your population to stay at home, to undergo controls and so forth and so on? Because the Chinese, they know the US wants war, or they think the US wants war. And so I think one of their concerns is the preparation for a war situation.
That's an interesting way of looking at it. I had looked at it a little differently because of the Congress coming up. There was a lot of market turmoil You talked about the rich people losing a lot of money. Same with the middle class. And I took the lockdowns as a way to control the messaging until Xi got reelected, was the way I looked
Yes,
at
that
it.
may
But
have been the case before the Congress, but he wanted to control the population. But I believe that the Chinese are preparing for war. I mean, they're not going to start the war, but if they're attacked, or if the US leads to a provocation where they must intervene, and the provocation could be over Taiwan, there's certain things that the Chinese will not accept.
in what way in Taiwan?
Well, the Chinese consider Taiwan to be part of China. If the US would base troops in Taiwan, which is a possibility that they'll do it, or if the US were to establish missile bases, I think this would be a trigger point for a Chinese intervention.
Yeah, I wouldn't disagree with that. That's like the
I mean,
Cuban
I
Missile
would like to see that day, because that day, the heavy artillery will move out of China and the damage will be huge.
Yeah. Well, it seems to me that scenario is like the Cuban Missile Crisis in reverse.
Yes.
Nothing good can come of that, and hopefully in that case the Americans would end up backing down from it. Who knows?
I write frequently in my report, I think that Asia looks very good economically, and also from an equities market point of view. In other words, I think some markets in Asia could move up 20% in 2023. I live in Thailand. I have some, for reasons because I live here, I have investments in the country. I think the Thai stock market can go up 15% this year easily.
Now, if you're, someone like myself that's sitting in North America, is there an easy way to invest in those markets, or do you have to get like a foreign brokerage to help you?
Well, that I understand, but to make money in life is never easy. You understand? But you can buy ETFs on Asian countries. There are country funds for Indonesia, Malaysia, Singapore. I prefer to buy stocks than ETFs, because ETFs, they buy the index. But the index in future, like the S&P, may not be the most desirable investment. You understand?
Yeah.
Stock selecting, active money management, in my opinion, will make a comeback.
Well, I agree with you. Bear markets are stock pickers' dreams.
Yes, exactly. That is the time when stock pickers come back and where value investing comes back. So I think there is a double play. Emerging markets are depressed, and value stocks in emerging markets are also depressed. So you get a double upwards whammy, essentially.
So that's where the boom could possibly be for 2023.
Yes, and I advocate diversification. I think land, real estate outside big cities in the countryside in Europe is very inexpensive. I don't like the socialist governments in Europe and so forth, but land in the countryside is cheap. And precious metals, as you pointed out before, I don't think they're all that cheap, but I think that the central banks sooner or later will print again money. And under those circumstances, I I think that individuals should own some precious metals at all times. At all times. I don't buy precious metals because I think they will go up tomorrow or the day after. I buy them for the last 40 years, months by months.
Yeah, well, precious metals are like an insurance policy. You buy it in hopes that you never need it.
You hope that idiots like Trudeau and other governments around the world will not take your gold away from you.
Yeah, true that. And we certainly can't trust Trudeau to keep his hands off of anything.
No, he's one of the worst interventionists because he combines incompetence with arrogance.
Over in Asia, were you aware of his latest move? He forced the Chinese state-owned mining companies to divest from their Canadian holdings in order to repatriate critical metals was the goal, but he never touched the offtakes and the streams, so they can still have the metals, they just can't own the companies. Strange intervention, as you say.
They're all these governments, although in economic books it's clearly established that the private sector drives economic growth, over the new leadership that we have and under the influence of the World Economic Forums, we never had as many interventionists that run countries. Biden is an interventionist in everything he puts his finger into. And then he has his bureaucrats that are completely incompetent and they run the country essentially. And we know what the result is.
Yeah, but traditionally the Democratic Party's always been that way. They've been interventionist.
Well, I think the Republicans are also interventionist. But let's say you look at England or France, they're all arrogant interventionists. Or you look at the Dutch government, they intervene to the disadvantage of the economy of their countries. In the Netherlands, which is the second largest food exporter in the world, they want to reduce the farm ownership that produces livestock.
Yeah, we've got some of that stupidity happening here too. They want to the farmers not to use any fertilizer.
They're all crazy. These are zealots that don't understand free markets. The capitalistic system has disadvantages, but it made the world very rich. Most people in the world have enough to eat nowadays. This is an unusual state of affairs. But the governments come in and destroy that. Most of the price increases you've seen in the last 18 months are not because of Putin. They are because of government interventions.
Yeah, I agree with you. Most of it comes down to the higher cost of energy, and that was well on its way up before even the first bullet had been fired in Ukraine. If people want to get a hold of you, Marc, how would they do so?
We have a website, gloomboomdoom.com. I repeat all in one word, gloomboomdoom.com.
Wonderful. Thanks again for joining me, Marc, and I look forward to the next time we get to speak.
Yes, thank you very much for having me. And once again, all the best and healthy new year.
And a happy new year again to you. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.